Hello traders, today is the 23rd of May 2010 and this video is how to trade the V chart pattern like a professional trader. Okay, right here we see the price went all the way down here and then move up straight away here. This session here is the V chart pattern. Okay, the V chart pattern, you see the price one trend followed by another trend without pause. That's why you have the V pattern. Went down and then went up straight away. From October 2007, the S&P 500 went down up to the March 2009, and then from March 2009, the price went up till now, which is May 2010. Okay, so almost 2 years downtrend, 1 year uptrend almost. Now we are at 61.8 Fibonacci retracement level at a key resistance level. This support level has been retested here, and right here fell, became a resistance level on the weekly chart of the S&P 500, the market index. Okay, we are exactly at that level here, corresponding exactly to the 61.8 Fibonacci retracement. It's normal for the price to come back and retest this V bottom here. Now, how do you trade the V button? Okay, the V bottom. Okay, after a long downtrend, I do not very much rely on the V pattern because the reason is I prefer the double bottom pattern compared to the V pattern. Okay, because the V pattern, the psychology behind the V pattern is the tiredness. People are tired. Okay, so you have a downtrend all the way for 2 years. People are tired of the bearish market. They are looking for opportunity for the trend to change. Okay, but because they did not have any consolidation period, there was no consensus, there is no agreement, there is no fundamental to back the new uptrend. Very important, because after a downtrend there must be some kind of improvement backed by solid fundamental in order to give to the trader that the market has a valid reason to proceed in the other direction. But in this case, because of the recession, in global recession, we do not have any fundamental that will back the movement to the other direction. But because people are so tired, and the fifth wave also is completed, you see, first wave, second wave, and third wave all the way here, followed by the fourth wave, and the fifth wave has ended here. The professional respect the Elliott wave theory. They came out here and they bought it straight away. They say end of it. But instead of having the ABC correction pattern straight away, we end up having a V button because people were so tired of the bearish season. And also, if you understand clearly, the psychology of most traders, they spend most of their life buying things. They don't get used to selling. Okay, because we are consumers. Most of the people buy all their life. Since they were child, they never sold one single item. Thanks to eBay and Amazon, now people start selling things. But in the past, people just keep buying things, buying things, buying things. Why should I buy? Why should I buy? So they don't get used to selling. And during the selling season, the professionals are the most active traders, and most of the retail traders will take their money and go away because they don't understand how to sell. And even some people don't know when to sell. It's normal. If you do not know when to sell, it's better to take your money away. But if you know how to sell, you will make money very fast because the price will fall faster than it rises. Okay, so right here we have 2 years, almost 2 years of downtrend, and right here the trend line was broken. Here you see this downtrend was broken, and they retest this trend line here with this green candle here, and this resistance level here is broken right here. This horizontal line here is broken by this candle here, and the people just bought it here, you see, and it went up, pull back again, and they bought it again, and right here it has failed. And I know that you will fail because right now I will be looking for opportunity to sell only the S&P 500 because the market will tend to pull back and retest this level here. So the psychology behind the V pattern is that if you want to trade the V pattern, the trend line is broken, price pull back and retest the trend line, and then you buy right there. Okay, this is what's happened here. You see the downtrend. Okay, the V pattern is here, and price pull out, break the trend line, retest the trend line nicely here, and you buy. The price went up, or you wait if you are smart trader for this resistance level to break. Okay, resistance level here is broken. Okay, you see those wick of those tail here, it's touching it carefully here, and then you bought it here. It was a difficult period, many weeks to wait. Okay, it's not very solid. You see people were still selling here because the 50% Fibonacci retracement traders are busy selling during that time. You see the price at 50% Fibonacci, people were busy just selling, which is not good period to buy right here. Okay, but there was a clear buying signal here, and the price went up only to fail at 61.8 retracement level. So the psychology behind the V pattern is that after a long trend, people are fed up. The market is either oversold or overbought. Okay, and then the trend line is broken and retested, and people enter after the validation of the trend lines right there. Okay, that's what's happening here. That's how you trade the V pattern. So you wait for the price to break. That's why you draw always your trend line. The trend line right here is broken. If you remember, also I gave you this tip for the day trading on the hourly chart. You draw your trend line on the hourly chart. You see a V pattern. The price break it, retest it, okay, and then you buy after the trend line is broken and the stochastic become oversold, and then you just buy. Okay, that's what's happened. Trend line broken and then stochastic oversold, and then you buy. That's how you trade the V pattern. Okay, so this trend line here is broken, stochastic oversold, and no people will buy here. They buy it, price went up, stochastic became overbought here. People try to sell it here at 50%. The price ignored them, continue the movement to the upside, but they sold it finally here, and the price went down here, and then there is a valid buy signal, better buy point here. The price went up only to fail right here, and you know straight away that the price will come back. It will come back. It will come back at this point again to validate this support level here. Okay, so this is the psychology behind the V chart pattern. The V chart pattern, remember, is just the market is oversold at the V bottom. At V bottom, the market is oversold. You wait for the trend line to be broken and the stochastic to let you enter the trade. Okay, so 2 years of downtrend. Okay, people talk about it, people get fed up of the downtrend. Even the bear also start wondering. They count the wave, they see the fifth wave is completed. If the best thing to remember is that as soon as you see the V pattern, if you see a V bottom, you look, you say this is a V bottom. Okay, you say this is a V bottom. Okay, try to count the wave. Okay, if you have the fifth wave finishing exactly at the V bottom, you can participate in the change of the trend. Okay, so we count here, we know that it's a first wave, second wave. Okay, the third wave started here all the way down here, fourth wave, fifth wave, and we see this thing going on. You will be watching carefully first because you don't know how the price will react. Okay, so right here it becomes clear after this level here that we are having a kind of a V pattern. Some people will say inverted head and shoulder. This is the head here, this is the shoulder, this one will see the shoulder here, but the technical analysis is not a science. Some people will see different things, but it's up to you what you want to see, whether it's a valid thing you are seeing or not. Okay, the result of your training will tell you whether you see something that is valid or not. Okay, so the price change direction here, we have V pattern. But if you are trading a V pattern, you have to know that the market does not like the V bottom as such, because we prefer the validation of the support and the resistance level. If you have a V top also, the same criteria apply. After you see the V top, wait for the trend line to be broken, and then you use your stochastic in order to participate in the change of the trend. Okay, so I'm not a V pattern trader as such. I'm more into double bottom pattern, triple bottom pattern, which give me a valid point to enter the market. Okay, so I hope this video about how to trade the V pattern also helps you to improve your trading and get a better result. Okay, but if you are interested in order to achieve consistency in your trading, you must use the tools that can give you consistent winning trade. And one of the tools on the market right now is the TSTW24 trading system. It will give you consistent winning trend. You will be able to participate in all trend. You will know when the trend has ended, and you will capture consistently the third wave, either on the daily chart, on the weekly chart, on the monthly chart, on the 5-minute chart, on the 10-minute chart, on the 4-hour chart. Every time frame you are able to participate in the market and also improve your trading results. Okay, so till next time, enjoy yourself and be very, very happy. Thank you.